Taking a look at Safaricom's results, full year profit jumping by 44% and obviously beating most analysts' expectations.
Well, thank you for having me, Eleni. I'm glad to be here today. Yes, Safaricom has shocked all of us. In fact, the profits are double what I expected. I was expecting maybe 16 to 20% growth. We've seen them make a 43.8% growth on their net profit. And I think this news comes as a relief, especially to the investors, because last year they felt a little disgruntled, maybe because of the poor handling of an IPO the year before, and maybe the not so high dividend payout, which actually has been doubled this time round. So we're looking to have Safaricom rally. I think it has already begun its rally today. It's already gone 20 cents up from the last trades I saw. And I think it's a good thing for the company and investors alike.
Well, we know that the competitive environment is becoming even more rife in the likes of Kenya, of course, Zain and Bharti teaming up. But apart from that, we know that Safaricom is trying to be as innovative as possible. We know that M-Pesa really contributed positively to this set of results. And I think the M-Kesho, which of course is a new strategy with the likes of Equity Bank, is going to have an even better impact on results. But it is all about market share, and many are now questioning whether things will go a bit lower for the likes of Safaricom, purely because of the competitive environment and the new regulatory reforms which have also come to the fore.
Well, what you mentioned is really true, and it's actually one of the many challenges Safaricom outlined in its bid to grow further. We know it's a mature company. We have competitors like Zain, who currently hold significant 17% of the market share, recently reduced their tariffs, and I think this kind of ups the stakes. We also have the others like Orange and ISA. But Safaricom, I think, has really had a boost in the arm with these results. With a reduced PE close to 14 now, I think Safaricom should not worry so much. The regulators also kind of backed off in their hardline stance to regulate the pricing of tariffs and other regulations in the industry. So I believe Safaricom is headed in the right direction and should not worry too much about hurdles in the way.
You're talking about a PE of around 14. We know that Safaricom has been coming under slight pressure over the last few trading sessions, although we have been seeing quite a lot of volume coming through into the stock. Yesterday we saw it coming under quite a bit of pressure, I think, in anticipation for those numbers. But at the end of the day, it seems that investors were kind of jittery in terms of what we'll be seeing this time round. Would you be buying Safaricom at these levels, given that these numbers have been so great and have beaten expectations, and also the fact that it seems that, again, Safaricom is a company that is just so innovative that we shouldn't be worrying too much about the loss of market share?
Indeed, Safaricom still has a few aces up its sleeve. We have the M-Kesho, which is yet to be fully felt in terms of its impact on the company. The investors could look to that in future. We also have the very affordable share price at 5 shillings and 50 cents, although growing. And I think Safaricom, yes, I would be buying it right now. And I think it has already established a concrete support at 550, and we could see the price only move up from here.
I don't know if you got a chance to look at Total Kenya's numbers as well, and we saw net income at 206.4 million shillings compared to a loss of 108.8 million shillings.
Yes, Total also had some corporate actions today, and like any other oil distributing company, oil has been an issue, especially because of the increased international oil prices last year per barrel, rallying to even 86 shillings about a month ago. And this really hurt them, and it also they also face a lot of competition from their counterparts like Kenolkobil. And a 200 million plus from a minus of almost 110 is, I think, good news by all means.
Definitely, and I think we've got to appreciate that the oil price is coming under pressure. Of course, the global recovery is now being disputed and threatened by a lot of debt worries coming through from the Eurozone. But at the end of the day, when you look at a company like Kenolkobil, we know that it is expanding quite rapidly. It went ex-div earlier this week. Apart from that, we also saw that share split coming to the fore. Amongst those oil majors, which company would you be heading for? Would you prefer the likes of Kenolkobil, or would you go into a company such as Total?
Why not both? Well, you could look at Total as a buy for below 30 shillings. In my view, Total is a good buy. Anything above the 31, 32 shilling mark maybe is a hold position. So looking at Kenolkobil, it's come split, and normally any share come split is a buy. And I would actually urge many people to look at it as a potential growth stock for now, because buying in at 100 shillings, it could be split, maybe it goes down to 10 shillings, and you would look to make growth thereafter.